3, 4, 5, and we are live. Welcome everyone to 345 Tech Talks. I'm Andrew, partner of 345 and the CEO of Glue. I'm just doing a short episode today. It's Sunday. I apologize that we've been a bit lax in getting the podcast out lately. We've had all sorts of interruptions. So Friday before last, we had Easter and we weren't around. This week, Friday just gone, we've been at the Blockchain Expo Global in London, and so we weren't able to get a recording done at the Blockchain Expo. However, one of the things that I'm going to talk about today is blockchain. Just talk a little bit about what we have come across in the Blockchain Expo, some of the things that are hot in the world of blockchain at the moment, and what that means for really where the industry is going, in my opinion, and what you might be able to pick up from that. So the first thing we'll start with, again, for those of you who've been living in a cave for the last few years, blockchain is quite a big topic at the moment, quite a big technology, but not as hot as it was last year. So last year we went to the same expo, Blockchain Expo Global at Olympia in London. And last year it was so much of it was all about tokens and trading and cryptocurrencies and what's up and what's down and that sort of thing. And this year that's all changed quite a lot. I was actually having an interesting conversation the other day, and where someone made the comment that the worst thing that happened to blockchain was cryptocurrencies, and that was a really interesting thing. It set me thinking. So really, what is blockchain? So back to the if you've been living in a cave, what is blockchain? Blockchain basically is a kind of distributed database. So if you have if you have data, you can write transactions to a blockchain, and they will be digitally signed and recorded in blocks, funnily enough, and those blocks are written one at a time, and one links to the other, hence they are a chain. So one has a chain of blocks, but a block is just a chunk of data, and a chunk of data, and so blockchain is really a series of chunks of data, one written after the other. The previous one can't be changed and the next one points to the previous one, and they are just a write-only record of data. Now, why does this make blockchain useful technology? Because it's been sort of a massive, blockchain's been a massive technology innovation. And again, a year and a half ago, there were all sorts of projects around that were blockchain of this, blockchain of that. And it was really just a question of, if you could have a normal thing and stick blockchain on it, then suddenly it was an amazing idea. And that's kind of gone away because people have cottoned on to the idea that really blockchain is effectively an immutable distributed database. And so applications that are good for blockchain are the ones where we want to have immutable data. So some examples of that are, so for example, cryptocurrencies was quite a good use of blockchain, and obviously Bitcoin being the genesis of the whole technology, because a transaction of sending value from one person to another is an immutable thing. And so that is an application of blockchain. But a lot of people think that blockchain is Bitcoin, blockchain is cryptocurrencies, and cryptocurrencies are all a bit of a scam, and so the whole thing is a complete waste of time. Not so. So imagine any other thing where you need to write down records of things, where that record can be retrieved later, and you know it hasn't been tampered with, and you know exactly when it was written. How useful is that? Well, it's obviously it's really useful, um, particularly in situations where there is uh, a really stringent audit requirement or a really stringent kind of legal and evidence requirement. So, for example, copyright. What's the what's the primary thing of establishing copyright? Well, it used to be that you put a letter in. If you wrote a book, you'd take a manuscript of it, put it in the post, and send it to yourself, and keep the envelope in a safe with the postmark on it, because that would say, on this day I've sent this manuscript. Now you can assert copyright via blockchain. So either by the full document being on a blockchain, which might be a bad idea, or by writing a hash of a digitally signed document onto a blockchain, so that you can then say, that's my hash, therefore on that date, this document here was written to the blockchain. If you redo the hash in it, compare the hash to the one on the blockchain, they're the same. Therefore, I can confirm that document was written at that time. So there's quite a few solutions on the way that are coming out now that are in that kind of area of legal documents, contracts, or basically anything that DocuSign or eSign. Those are candidates for being on the blockchain, because you've got that record and that stamp. And other things that are another thing that's being touted around on blockchain is KYC, know your customer, like identity verification. So, for example, let's say you need to get your identity verified, and there can be lots of reasons why you might want your identity verified. So, to open a bank account, to buy a property, buy a car, various sort of licenses, but also for various things for financial services. So all the areas where you might need to be an identified person for money laundering or whatever. So with a KYC system, you can have your identity verified once, stamped on a blockchain, and then you can reuse that. I mean, obviously there will be an expiry period for it, probably maybe a year. But after that, you can reuse that identity on a blockchain. So having had your documents, your identity documents and everything verified once, you can record that on the blockchain. It's immutable. It can't be changed. The time that it was done, the timestamp when it was done was set, and then you can reuse that. And then there are various other things that are really kind of obvious uses of so anything that asserts ownership, any sort of title of ownership. If you want to move from a paper-based or a certificated record of ownership to one that is electronic, blockchain is a good application for that, because ultimately ownership is the same thing. That at a certain time, ownership of something is asserted to a particular person or group of people, and that needs to be recorded permanently in a way that can't be repudiated or tampered with. So again, anything that's ownership based is a good application for blockchain. And finally, audit. So again, if you have something that is very audit dependent, I mean, we spoke to some guys the other day, and they were tracking pharmaceuticals to make sure that there are that there are no counterfeits. So basically, from the point at which a packet of pharmaceuticals is manufactured through to the point of dispense, all the way through that distribution chain, you can record audit events for that. And again, you write them, they're immutable, and it's actually an interesting use of smart contracts because if you've got a whole sequence of events that should happen, you should be able to confirm that the previous point in the sequence has also been written on the blockchain before you then allow the next one to be written. So, audit is a great use case for blockchain. Which brings me on to so the next thing I was going to talk about with blockchain was what are the, okay, we've got this thing, it's like a immutable database, yay. What are the drawbacks? And one of the main drawbacks that I can see, and I'm not saying this is a permanent drawback or that there aren't ways around it, but ultimately, if you are writing humongous amounts of data, performance can be difficult, which is why a lot of blockchain solutions really are recording hashes of data where the data is stored somewhere else, rather than putting all the data on the blockchain, because it's not really an efficient way of storing a huge amount of data. So blockchains are really, they're really good for writing small amounts of data, hashes and that sort of thing. But actually, if you're putting, if for example you were making movies and storing gigabytes at a time of movie data, what you wouldn't do was stick your movie on the blockchain. What you would do is you'd stick your movie in some kind of blob storage and create a digital hash of it and sort of hash on the blockchain for proving the a particular point in time validation of it. So performance is definitely one issue. There are a whole load of technology advances underway that are mitigating performance. But just bear in mind that if your goal is to have a performant database, blockchain is not the obvious answer. The point of blockchain is really the immutability and the auditability of it. The next thing is that really the other thing to watch out for is really just don't use blockchain for situations that aren't appropriate for it. And there's an interesting thing here, and it kind of comes onto a big theme in the world of blockchain, which is that of decentralized, trustless. Because if you look at the origins of blockchain, it was how do you maintain trust in a trustless, decentralized system? You often hear the term the Byzantium generals question, which effectively is in a distributed and asynchronous system. How can you maintain trust across a whole load of peers that don't inherently trust each other? One way to do this is to have a private blockchain where you have control of all the nodes and they're trusted. And the other one is to effectively have protocols for how the nodes in the system will vote on what is the bona fide data. Bitcoin as an intellectual exercise had has a fantastic solution to this. Just as an intellectual masterpiece, Bitcoin is just fantastic at what it achieved in this area. But by putting something on a distributed, public, trustless blockchain, you achieve a very good thing of having that not only are your transactions immutable, but they are publicly viewable, and so they aren't, they can't be intercepted by any one party. And if they're on a private blockchain, you kind of have the whole thing of, well, who can see them? Is there any point? That if you're making a private blockchain, what's the point? Because if it's private, could you just have a database? Question. So there's some, and so we've done a lot of work on databases. Obviously, Paul has emptied the contents of his brain in a previous, I think it was episode 2 of the podcast, which was from yes SQL to no SQL. So if your point is that you want to store a whole load of stuff reliably, uh, and it's private, do you really want to just, should you be looking at certain database technologies rather than a private permissioned blockchain? So, big question there. And I think, certainly if it's, the other thing with blockchains is that, is the whole thing of there having been a blockchain is a chain of blocks. And so you have you start off and you maintain an audit record of everything. So you have your origin block, the first one that's written, and then everything else chains off that. Now, in a normal, quasi-normal situation, you think about data archival, and you think about how long do I need to keep this data for before I can get rid of it, and so you kind of think, well, okay, I might only need the last year's worth of data. Anything older than that, I'll put in some kind of deep freeze, cold storage, so we can get it back if we need it, but I don't need it in my database because then I know the time window that I've got, and I can manage performance, and I can manage operating costs and all that sort of stuff. And with blockchain, the fact that you have an origin block and everything else builds on that. So there's also a question there about, have these people really thought about, archiving this stuff after a period of time? And I think there's a big question there. When a lot of the blockchain platforms are in place, and they've been in place for many years, I think they're going to run into some issues there unless someone has some good ideas about how to do that. So there we go. Some issues there about drawbacks. So I've talked a little bit about crypto tokens and how a year ago that was all the rage. There were a lot of people pitching their coin offerings. There was all sorts of people having booths where they were talking about their coin, and of course the trading of coins. A lot of exchanges were having, we're at the expo this year. Very, very little on tokens, coins, coin offerings. There were a few, and definitely there is a move towards coins being, instead of the whole ICO thing of raising equity by selling a magic token and then claiming that it's worth something, is kind of over, unless there is some underlying value associated with it. And I actually think this is where the ICO and the explosion of cryptocurrencies and tokens and ICOs a year and a half, 2 years ago has done a massive disservice to the industry, because actually one of the things that blockchain is really good at is the whole thing of making things that are not fungible. So for those of you who aren't monetary theorists, fungibility is basically about how you can divide something up. So if you have a pound, for example, a pound can be divided up into 100 pence. Therefore, a pound is fungible to 2 decimal places. And a Bitcoin is fungible to, is it a millionth to us, or is it a billionth to a Satoshi? So effectively, one of the things that makes cryptocurrencies very, very good is their fungibility. And if you combine the fact that you can represent the ownership in something as a digital token, and those digital tokens can be, so let's say you've got an apartment or a house, and someone owns the house. So let's say you then set it up so that a nominee or a legal entity owns the house, and that legal entity issues 1 million tokens. You can then basically buy 1/1,000,000th of a house by a token, and that might be 20p, 30p. but you've then got a millionth of a house. So previously, if you bought a house, you've either got a house or you haven't. It's not a very fungible thing. But then by issuing tokens against it, you can then suddenly buy a millionth of a house as a token, and then you can buy a millionth of that token. So basically, any practical amount, from the very smallest amount through to the to 100% of something, can be bought and sold via tokens, and that's actually a really, really exciting way that things can be sold. And so fractional ownership of things is a really, really good way and a good application for blockchain and cryptocurrencies. And I really feel that all the ICO hype has kind of given it a bad name. It's made it seem dirty, where actually that is a really good business application there. And so in the future, and people say, okay, we've got land registry. Why do we need it? We've got share registries. So why would you divide a company into 1 million shares and sell them on a blockchain? Well, it's also because by putting these things on blockchain, you make the buying and selling of them technically very easy. You make the ownership of them very easy and the transfer of ownership very easy. So whereas, at the moment now with share registries, you have this central authority that is the share registrar for your company, and then any buying and selling of shares has to go through them. When you blockchain it up, suddenly that intermediary is gone. And, okay, you buy 10,000 shares in the company and you want to sell 10.1234567 8. You can do that, and it's very, very easy because of the whole thing of the means of exchange and the fungibility of things. That you start to, once we start to tokenize all sorts of assets, they then become very easy to exchange. And then once they become very easy to exchange, we can then start to, I'll sell you, I'll swap you a millionth of that house for 30% of that car. And so suddenly you start to get into this scenario where we can actually, where although everything has a nominal price, maybe set against a benchmark in dollars, that actually you can trade one thing for another. So a farmer who is selling futures in their crop can issue cryptocurrency that's redeemable against their harvest, and swap that for maybe someone that does fertilizer or whatever. And so we start to get to this situation where taking the things that things of value can be exchanged directly with each other without necessarily always having to find someone to convert them into a currency and then find someone else to convert that into the cryptocurrency. So it makes I think there's a big future there for all the things, so there's been a rise and a fall, and I believe there will be a rise of the tokenized ownership of things. And I think a lot of the ICOs of, I'll issue a token, you can pay me millions for it, and then you've got a digital signature. That will go away, and people will actually start to sort of think about how we can actually use blockchain technology to represent ownership of things, and those things can be traded and exchanged and that sort of thing. And that's going to make a massive change to business. One of this is, and I think this is a very exciting thing, because at the moment, so let's say you want to raise equity for your business. It's actually not very easy. Okay, if you're a small business and you want to access money, okay, you can go to the bank and ask for a loan. But if you want to, if they say no or something, your options are quite limited. You can go and try and find angel investors and that sort of thing. But ultimately, the tools of finance are out of reach of small business. You know, it's if you're a big business, you can go to capital markets and you can go to private equity, and if you know if you've got access to the right people in the right markets and all that sort of thing, if you've got if you've got access to big finance, you can get hold of oodles of money and structure it in a way that's advantageous and all that sort of thing. If you are a small player and a small business, it's really hard. And one of the things that blockchain and crypto tokens will do in the future is it will make that sort of finance available to everyone. And that's a massive seismic shift. It means that the banks are going to have to change. They're going to have to up their game in order to stay relevant. It means that the bond markets are going to change. Probably not a bad thing. It might not affect the big boys, but certainly there will, the amount of small scale finance that will be done via blockchain is going to be really big. And this is why, in terms of, our project Glue, which is like, the TripAdvisor of cryptocurrencies, or the ultimate product catalog of cryptocurrencies or crypto tokens, or whatever it's anticipating that future when there are hundreds of thousands of tokens out there, all representing different businesses that have raised money or sold shares or sold their house or whatever, and to make that discoverable, because there isn't any way at the moment of making that future work, making that future discoverable. So so crypto tokens are out of favor. They've risen, they've fallen, but they will rise again, because the opportunity to bring finance to everyone is too big. It's too big an opportunity to ignore. So I'm just looking through my notes. So we talked a bit about the use cases where blockchain's good. Another thing that's quite interesting is the blockchain platforms. So there are, the industry is already moving to a blockchain as a service kind of thing, where if you were going to set up a blockchain solution now, would you really write your own? No, you'd take an off-the-shelf one and you'd use a blockchain as a service. IBM have been in there from the early days, and they're big. They weren't at the expo this year. They were there last year, but they're a big player in this now. As are I think it's JP Morgan, quite big on that as well. They've seen that blockchain as a service is something that they can really get their teeth into, and they're doing that in a big way. It's interesting that Hyperledger, which a year ago was just Hedera Hashgraph. I mean, that is a massive, unbelievable breakthrough in technology as well, and they are kind of licensing their stuff out to a lot of people. So the whole Hyperledger, the whole Hyperledger ecosystem, again, is just moving forward at a massive pace. So if you wanted to build stuff, that's a great ecosystem to look at. And then there's some of the other platforms. So we know the Stratus guys quite well. Stratus platform, stratusplatform.com. As 345, we've done work for them in the past, and we know quite a few of the guys there. That's a great platform that you can just go and use, and they're really starting to motor now, getting some interesting projects on board. So have a look at them. We also spoke to some guys from one called Ocyan, Ocyan, I think it's spelled Ocyan. They said, we're the AWS of blockchain, which I thought was quite funny, because AWS do have a blockchain, but they nice guys though. But things are going like that. It's, blockchain as a service. So really, from the perspective of building solutions, there's starting to be tools out there now where you can get blockchain apps together without having to have an awful lot of infrastructure. So really, really exciting stuff. And there were a few people out there just looking down the list. So there's still quite a bit in the wallet space, but wallet space is becoming a lot more sophisticated, as you can imagine. So let's imagine you had £1 million worth of a cryptocurrency, be it Bitcoin, Ethereum, or whatever. Imagine you had a serious amount that if it was hacked, you'd be very upset. So there are solutions coming, so there's a whole load of solutions for real security, where you have to have like 3-factor authentication or multi-signature, so that if you had a corporation that had some investments in crypto and you needed to make sure that one person couldn't run off with it, so you had policies for multi levels of signatures, all that sort of stuff is starting to come out now in a reasonably mature way. So that's really kind of that's a big thing, and making that also, what's the word I'm looking for? Easy to use. There's a year ago there was kind of hardware wallets were starting to be a bit of a thing, and if you've ever tried to use a hardware wallet to store your crypto on, I mean, okay, it works and it's fairly secure as long as you don't lose your dongle and that sort of thing, but they're not easy to use. And actually, there is some of these solutions that are coming out now where effectively they hold your private keys in a hardware device and require you to provide 3 factors of authentication, which is something you have, something you are, and something you know. So something you are is, for example, biometrics like a fingerprint. Something you have is like a dongle, and something you know is like a password or a PIN. So that kind of 3-factor authentication is starting to be, come in. And also the other thing about these is that it means it's recoverable, because if you have your private key on your phone, for example, in secure storage, and you lose it, then it's game over. If you have a hardware, let's say you've got a Ledger wallet, great product, Ledger wallet, but if you lose it, you've lost it. So, and what you can do for backup. So a lot of these solutions are really useful. So there's a few of those we spoke to, really clever products, really nice guys on the stands talking about those, just genuine people just trying to do a good thing. So the last thing I'm going to talk about, so I said this is going to be a short one this week, and it is. I apologize if I've been rambling, but it's really just trying to get down my impressions from the Blockchain Expo about this industry. So the last thing is our experience talking about glue, because we know what glue is. I kind of have a shorthand that glue's like TripAdvisor for cryptocurrency token blockchain world, because people kind of know what that is, but it's glue's a lot more than that. But it's difficult to put it into us. So we're still trying to find the right phrasing to sort of say it's that, and for everyone to say, oh yeah, the TripAdvisor for crypto and blockchain is probably the best one we've got so far, or the definitive the definitive product catalog of crypto, or the definitive encyclopedia of crypto. And so we've been talking to people about glue, and that's been a really good reaction, because again, no one has got a really good way of establishing whether a digital asset or digital crypto asset can be trusted. They've got very little way of cryptocurrencies being discoverable. They've got very little way of knowing beyond what the price is of a cryptocurrency. For example, there's apologies if you can hear my dog barking, by the way. I think my neighbours are coming out of their front door, and the dog's getting really excited. So But if you're at, for a cryptocurrency at the moment, you can look at someone like CoinMarketCap, and okay, it's got market cap and it's got price. So if you've issued 1 million tokens and then those tokens are $100, then you've got 100 million as your market cap. It's like, woo. So what? What does that actually mean? It doesn't mean anything. And so one of the things that we've been developing is like a trust rating system, which takes into account a number of factors such as how distributed a blockchain is, how distributed the ownership of a blockchain is, how much, what sort of levels of activity are there on that blockchain, both in terms of numbers of transactions, frequency, and the percentage of the overall amount of units that are being transacted, and a whole load of other measures that we have. And there isn't anything like it. There is nowhere where you can say, I trust this because, other than someone has an opinion. And so as trying to produce like a benchmark trust rating is actually something that people are interested in. They're also interested in the navigability around the environment. So, okay, you've got, like we were talking to some guys from MediConnect, really good, really good use case of like medical order data, particularly around prescriptions and dispensing, and and they're built on Stratis. And so you can sort of say, okay, there's MediConnect, and then how do you navigate from them? So they're on the Stratis blockchain platform, and then on Stratis, it's like, well, what are the other projects on there? There's just no way to navigate around that stuff at the moment. And actually, it's a really useful thing. So just this ultimate catalog with an objective trust system built in has gone down really well. So we're going into live beta in a couple of weeks. So really excited about that. And it's gone down quite well at the show. People just want to see it now. We've spent a lot of time talking about Glue and the fact that we're doing something different, and it looks fantastic. People are going to love it. But really, really, really excited now that we're at the point where we can actually say, okay, people are going to see this in a couple of weeks. So look out for the live beta. We will be saying when it comes out, but it's a couple of weeks from now. So on that note, it's a fairly short one this week, but I'm going to sign off. So I've been Andrew, and this has been 345 Tech Talks. Thanks for listening, and we'll catch you next time. Okay, bye now.